Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Vivek, the markets look very nervous right now. We did see some smart recovery come through after the initial fall that we saw. But the mid-cap end of the markets, that's holding up well, right?
That's right. Good afternoon, Vamakshi. Like you mentioned, markets opened up in a very nervous manner, but a very sharp intraday recovery. Like you mentioned, mid-cap, small-cap indices ensuring that the market bit remains very, very strong. Let's start off with the top headlines. Stock stage a very smart recovery after a weak open as investors shrug off fears of conflict escalation with Pakistan and focus on positive developments on the trade front. Auto and consumer durables lead the charge, while FMCG, pharma and healthcare drag. Mid-caps surge.
Digital payments platform Paytm in focus on the back of its Q4 earnings. Revenue grows sequentially while net loss narrows.
The street cheers Pyramid Enterprises' fourth quarter. Disbursements rise 16% sequentially. Asset quality also improves.
Angel One in focus after reporting its April update. Positives outweigh some market share loss. Meanwhile, pace of gross client addition picks up after slowing down for 3 straight months.
BSE surges in trade after revenue and net profit in the fourth quarter beats estimates, although operational performance was weaker than expected.
Well, 24,350, that is where the Nifty is at, not doing so well on the benchmark indices, but the broader markets continue to outperform. The mid-cap index is up 1.2%. As far as some sectors are concerned, it is the auto pack that continues to, shine and trade. We have Tata Motors up nearly 5%, MRF2 after reporting a good set of numbers up 4.5%. The FMCG index, on the other hand, is the top laggard. We do have some pressure coming in on Radico as well as Patanjali Foods. But there's like we mentioned before, the broader end of the markets is holding up quite well, and we now have a special segment, mid-cap movers. We have Hormaz to take us through the mid-caps that are moving around in trade. Hormaz?
Broader markets are indeed holding out well for themselves, and there are plenty of stock-specific reactions to various news triggers. Let's start off with Welspun Living at 14% higher for that stock. Sirma SGS ahead of its earnings next week is up 8.5%. Endurance is up 10%. So strong reactions for a lot of these mid-cap names. A couple of earnings reactions as well. A lot of numbers were reported in the last 30 minutes, and MRF is one of them, is now at the highest point of the day, 4.5% higher after the strong operational beat, if I could say that. CarTrade Tech was up 8% before the earnings announcement, is now 1% lower after the drop in the monthly unique viewers for the website, and that too has seen a drop of almost 9% now from the highs of the day. Paytm is a strong earnings reaction as well, and Bharat Seats numbers came in just a few minutes earlier. Stock locked in a 20% upper circuit in today's session. Now to other names, that the bigger trigger was the UK FTA that was signed, and the apparel makers are surging in today's session. And look at Gokaldas at one point was up 16 to 17%, still holding on to gains of 13. KPR Mill is up 7.75. Raymond Lifestyle is at the highest point of the day, 5% higher on that stock as well. Stocks doing well on the volumes front, and there are a couple of them that are not doing well as well. Radico Khaitan is one of them, is now down almost 10% from the highs of the day. Piramal Enterprise is an earnings reaction, as is BSC. Both of them doing well on strong volumes. And lastly, some laggards from the broader markets. There are plenty too, and defense names are some of them. Mazagon Dock and Bharat Dynamics both at the lowest point of the day, now 5 to 6% down on both these names. And Swiggy ahead of its results later this week, and the shareholder lock-in ending next week is down 5% as well. Back to you guys.
Thank you so much, Hormaz. A comprehensive list as far as the movers in the broader end of the markets are concerned. Well, just like to look at two stocks. The first stock, of course, has to be Paytm. This particular stock opened lower today. There was a one-time impact as far as the bottom line was concerned that led to a loss on the bottom line. But the subsequent management commentary was quite positive in terms of the company managing to turn profitability in FY26. On the back of that, look at the stock up almost 7.5%. And the second stock is one that Hormaz just alluded to. The results came an hour ago, which is CarTrade Tech. Look at the stock. Post results, the stock was up almost 10% at one point of time, but since then it's cooled off quite significantly and now in the red. What's actually happened? Like Hormaz said, unique visitors as far as website have cooled down, and also sequentially the numbers look quite muted. On the back of that, the stock now trending lower 1%. But it's a good time to welcome Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Good afternoon, Chandan. Thank you so much for joining us. First up, Does this continue to remain a buy on dip market? What are your views as far as the Nifty and the Bank Nifty are concerned?
Good afternoon. Thanks for having me. So Nifty got stuck in a range from last 6 trading session in between 24,200 to 24,600 marks. 4 days back, Nifty made high near 24,589. That was a 61.8% retracement of the entire down leg from 26,277 to 21,743 mark. So technically, index has completed one down leg and then recovery of the same, and now it requires the next leg of rally. But the good part is that supports are intact. Even after the concerns, even after the higher VIX at 18.8, the supports are intact in the market. Even the higher base is clearly formed at 23,850, 24,050 or immediate at 24,200. So because of all these levels, buy on decline could continue. Those who are looking for positional point of view, till Nifty holds about 24,050, upside could continue and market has potential to rally towards 24,750 to 25,000. Those who are looking for intraday point of view, 24,200 could act as an immediate support for a bounce towards 24,444, 24,500. So as of now, till market holds the key levels, buy on decline could continue. But one need to keep in mind that Bank Nifty witnessed some underperformance, and because of that, the upside could be kept. But till the key levels are respected, one has to continue to be with long position. Talking about the Bank Nifty index, it has been consolidating in between 54,000 to 56,000 from last 13 trading session. Now it is at the lower band of the trading range. So if it manages to hold 54,000, then some recovery could be seen to us 54,750 to 55,000 marks.
Thank you so much for that, Chandan. This is Mamakshi joining in. Could you help us understand if it's a buy on dips market? What are some of your top picks as far as some stocks are concerned?
Yeah, so I believe it's going to be buy on decline stance because key supports are being respected. Put writing is intact at lower levels. FI's long short ratio headed to 50%. Put call ratio is hovering near one level. The only concern is that few heavyweights banking stocks are not performing. But at the same time, Bajaj Finance started to witness buying interest. Reliance already seen the good run up in last 13, 14 days. That is taking some consolidation. So if these heavyweights come into the picture, then market will start the next leg of rally. So because of all these data effects, we believe buy on decline could continue. But I believe for next couple of days, we should focus more on the stocks rather than index because market may see some more consolidative move before starting the next leg. So talking about trading idea, first trade is buy on Apollo Tyre. We have seen good buying interest in most of the tire companies, be it C8, Balkrishna, JK Tire. And there are two key triggers. First, the rubber prices are trading at recent lows. Crude oil is comparatively stable and falling from higher levels. And most of the tire stocks are making higher tops, higher bottom with rising open interest and delivery volume. Talking about Apollo Tyre, it has been moving upwards from last 5 weeks. Supports are gradually shifting higher. We have seen addition of long build-up. So one can buy with support of 480. And Apollo Tyre has potential to rally towards 515, 520 zone. Second trading idea, that is buy on Radico. The stock has really done well, and selective FMCG and consumption-related name has seen the momentum. Radico is quoting at its lifetime high territory. It has seen a consolidation breakout of last almost 13, 14 days, and it is all set to give a decisive close above 725 marks, and that itself opened the further upside of 5 to 10%. So one can buy with support of 720. And the stock has potential to rally towards 760, 770 marks.
Thank you so much for that, Chandan. Keeping an eye out on Apollo Tyres as well as Marico. But, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned.
Welcome back to Midcap Radar. Well, one particular sector that's been doing quite well after a very encouraging set of Q4 results is the tyre pack. MRF is the latest to go ahead and declare its results. The stock is doing quite well, up almost 4%. Sudarshan joins in with the internals of the results.
So after C8, now it's MRF, which has reported a strong set of numbers for Q4 FY25, and it was a beat led by margin improvement. Revenue has increased by 12%. EBITDA has moved higher by 18%. It has come around 1,040 crore against Bloomberg estimate of around 900 crore rupees. And margin too has expanded. It has come in at around 15%. And there was an expectation of around 12.5%. So what has worked for the company, not only the company, for the entire sector, is the raw material cost if you compare sequentially, it has been flat. But now going forward, internals are now looking much better than what it was in Q4 of FY25. So I'll just read out the three factors. First, if you look at the crude, in Q4 FY25, average was around $67 per barrel. Now it's come down, it's around 60 or 59. Second, if you look at rubber prices, it's also trading at multi-month lows. And third, in the commentary of CEAT, the company had said that raw material cost in all probability in Q1 of FY26 also is going to be benign if you compare with Q4. So Q4 earnings are beat, and in all probability, Q1 is also looking better.
Well, thank you so much for that, Sudarshan. A beat on MRF. Resultantly, the stock is trading higher by almost 4%. But one other stock that is in focus is Paytm. Keep in mind that the stock had seen a knock of almost 6% yesterday, but today the stock is up almost 10% in trade following its Q4 earnings. We now have Abhishek joining in with the fine print. Abhishek?
Well, the numbers on the top line were below analyst estimate. However, the bottom line was encouraging and the management commentary also was encouraging. So to begin with, revenue is down 15.7% YOY and up about 4.5% sequentially. It came in at 1,911 crore versus Motilal Oswal estimate of 2,100 crore. They reported a net loss of 545 crore, but that is on account of one-time expense of 522 crore. The estimate of loss was about 110 crore, but the actual loss, if you remove the one-off, is below analyst estimate. Contributed profits, that was down 16.85% YOY and up 11.7% sequentially. The GMV, that increased by 8.5% YOY and about 1.2% sequentially. The total transactions are up 16.65% YOY and about 6.9% sequentially. In the con call, the management has mentioned that, EBITDA before ESOP, they will turn profitable in Q1 FY26, and that spooked, with respect to the reaction that we are seeing on the stock price today. Back to you.
Well, thank you so much for that, Abhishek. That's Paytm for you. The stock as of now is trading with a gain of over 7%. But another counter in focus is Angel One, but not on the back of its Q4 numbers, but its monthly business update. When we look at the gross client addition out here, it stood at 4.9 lakh. This is an uptick of almost 4% month on month. Keep in mind that in the month of March, we did see a downtick of almost 4%. So therefore, we're seeing the pace of client addition picking up after 3 long months, which is a big positive for a company like Angel One. The client base is steady. 3.14 crores is where the client base is at, an uptick of almost 1.5% on month basis, similar to what we saw in the month of March. Average daily orders have also recovered, up 4% month on month at 56.1 lakh. Average daily turnover too seeing a decent uptick of 1.6%, and in fact this has improved for the second straight month. When we look at the market share, the equity market share is up almost 12 basis points month on month. It has recovered to 19.6%, but the F&O market share is down nearly 37 basis points to 20.6%, and in fact this has declined for the third straight month for Angel One. Commodity market share also taking a knock after a good recovery that we saw in the previous month, which is in the month of March, and commodity market share now stands at 56.1%. But overall, when we look at the numbers that have come in for Angel One, the positives clearly outweigh the negatives. The stock reacting to that up 1.5%. Vivek.
Well, thank you so much, Vamakshi, for explaining. Angel One has taken quite a bit of a knock in recent times, and today's data indicates that there's some recovery in the offing. Thanks so much for taking us through the internals there. But moving on, remember, last evening, the US FDA said that they are planning to expand unannounced foreign inspections. Ekta joins in. Ekta, clearly the operating environment as far as Indian companies exposed to the US market is getting quite negative, right?
Well, yes, it's pointing to a tougher environment definitely for a lot of the Indian generic companies. So what the US FDA said is that they are going to be expanding unannounced foreign inspections. It builds on the foreign unannounced inspection pilot program, which they had conducted in India and China. The aim is to ensure foreign companies receive the same level of regulatory oversight as domestic companies. For example, US firms already face surprise checks. Foreign sites, despite the prior intimation, show more violations despite advanced warnings. Investigators have indicated that they refuse, or rather the US FDA paper has indicated that, to ensure objectivity, investigators will have to refuse certain things, for example, industry paid travel, to ensure that it is completely objective in terms of a regulatory inspection. Now, to put it into perspective, the FDA conducts around 12,000 inspections in the US itself. They conduct around 3,000 foreign inspections in more than 90 countries every year. These surprise checks, according to them, will help catch bad actors who falsify records and conceal violations. And they will also, or they can also, act against inspection delays, denials, limitations, refusals. The goal for them, according to this press release, is safer, legitimate products for Americans and a new phase of tougher, smarter oversight. I think, the street has already been preparing for this because the US FDA has been quite vocal about their plans with regards to this. But now they've put it down on paper. But most of the Indian generic companies, they've been supplying to the US. The large companies have been supplying to the US for years now. And hence, they're quite well prepared when it comes to any kind of surprise inspection.
Well, thank you so much for that, Ekta. Now let's move our focus to Radico Khaitan. The stock is under pressure despite a strong set of earnings. The management told CNBC-TV18 that they expect the momentum to continue and are set to achieve 15% growth in the P&A category. Let's listen in to key takeaways from the management conversation that we had earlier today.
We expect the momentum to continue, and as we have always maintained, our focus is on the P&A category, which we want to grow by at least 15% for the next 2 to 3 years. So seeing the momentum in all our brands like Magic Moment Vodka, which has crossed 7 million cases, our 8 p.m. Black, our After Dark, all the P&A Royal Ranthambore, which we launched, has done 2 lakh cases. So I think we are well set to achieve the 15% growth in our P&A, and our regular also should grow by about 12 to 13%. So overall, we expect the volume to grow in the range of about 13% for the next year. As far as the value growth goes, I think we should grow by about close to 20% plus in terms of sales value. EBITDA definitely would be higher than that. And as far as margin goes, we are consistently with our premiumization working to get the margin up by about 100 basis points year on year. So that is what we are aiming at. We term it as the luxury segment, where we talk about Royal Ranthambore onwards. So if you see in Royal Ranthambore is there, then you have Jaisalmer Indian Craft Gin, then we have Rampur Indian Single Malt, we have our Sangam. So these are our part of the luxury portfolio. Now, if you see in the last fiscal, our turnover was about close to 340 crores, which is a 30% increase compared to FY24. And in the current year, we are aiming to at least have a turnover of 500 crores of only our luxury segment. If you look at our Jaisalmer Indian Craft Gin, in spite of having competition from the overseas players as well as the domestic players, our market share is more than 50% in this segment. And with more players coming in, the category is more buoyant. So I think it helps with more competition coming in, it expands the category. And we are seeing that the gin category is like the vodka. It is now catching up, and it's still in a nascent stage where we are dominating with a 50% market share with our Jaisalmer. So I think with more players coming in, the category will expand.
Well, that was the management of Radico Khaitan saying that with more competition coming in, categories expected to expand. A very strong set of numbers. Stock is seeing about a profit booking in trade today. Well, the next stock on the radar, the next company on our radar is Aarti Drugs. It's reacting to its Q4 earnings, up over 15% in the session today. The management earlier told CNBC-TV18 a while ago that their revenue target stands at 3,200 crore over the next 2 years, which has been trimmed lower from the earlier guidance of 4,000 crore. And this is mainly due to lower API prices. Let's listen in to what the management had to say.
Actually, slightly had to revise it down. So what we feel that we will still try to make 3,000 crore plus in 2 years' time. And from there onwards, we will take another step to 3,500. This is purely based on the fact that the API prices have corrected tremendously over the last 18 months. So what we foresee is that the growth in API won't be that high, but intermediate nutraceuticals and spec chem, these three segments will grow more in the standalone company, and that will be similar to so formulation may not be going upwards of 15%, but the spec chem, intermediate and nutraceutical, that segment can almost double. Now it is around 8%, so it can go like 15-20% as well. So the API prices have stabilized since December quarter, which is a good news. And that was the main reason why our second half of this FY25 showed a good improvement in gross contribution margins. And now that it has stabilized, we feel that now we have to work more on the expense side of the manufacturing part to improve our EBITDA further. So in this quarter, we already clocked an EBITDA margin of around 14%. Whereas on the standalone basis, it was around 14.5%. So going forward, if formulation business improves more on the margin front, then the margins of 14 to 15% is not far off for us on a consolidated basis. So the prices have stabilized now, so we don't foresee any change in pricing scenario as of now. But when it comes to projecting FY26 versus FY25, the first half, we might observe a negative price variance of roughly around 4%. But that was because in the last year, we saw some price decline quarter on quarter. On that account, we are forecasting around -4% for the first half. The second half won't see any price decline year-on-year basis for FY26. And whatever growth we are forecasting for FY26 purely on the volume terms, hopefully the current demand continues like this in the coming 4 quarters, and with the addition of 2 more products, salicylic acid and a couple of methylamines, we feel that volume growth should be pretty easy for FY26.
Well, that was the management of Aarti Drugs. The stock continues to surge higher, up almost 17% today. But on that note, let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other sides. Don't go anywhere. Stay tuned. Welcome back. You're watching Midcap Radar on CNBC-TV18. One other counter in focus, Voltas will be reporting its Q4 numbers today. We now have Upasna joining in with the street expectations. Upasna, what are we expecting this time around?
Well, good afternoon, Vamakshi. First up, let me take you through the revenue growth. We are expecting revenue around 4,900 crore with a growth uptick of 17% on a YoY basis. EBITDA we are estimating around 354 crore with an uptick of 85%, and EBITDA margin we are expecting a sharp uptick from 4.5 to 7.2%. Now, significant losses in companies EPC in Q4 FY24 led to a lower base. That's why we are seeing an optically high growth in companies' EBITDA and profit growth. Now, when it comes to companies' revenue growth, it will be mainly driven by the company's UCP segment, which we are expecting around a 20% growth in this one, which will be mainly driven by RAC with a 24% growth according to Kotak Securities, commercial air conditioner with a 13% growth, and 5% growth in commercial refrigeration segment. Now, RAC revenue growth is expected to underperform this time around as company has lost its market share in this quarter. Now, let us look at the key factors that we'll be closely watching out for. We'll be watching out for the margin and demand outlook, ability to secure and gain market share forward, and company's commentary on that, and lastly on the new order addition in the project business of the company. So overall, we are expecting somehow a stable quarter for Voltas in its Q4 FY25.
Thank you so much, Upasna, for joining us and giving us a sense of what to expect from Voltas when it declares its results later today. As you can see on the bottom of your screen, Yum Brands operator Sapphire has gone ahead and declared its results. The net profit has declined on a year-on-year basis, down 25%, stock down 3%. There's been a moderation across all of the segments, including the EBITDA, which is down over 5%. But with that, it's all the time we have on this edition of Midcap Radar. Your stops when we return.